Trading US session. Now there's a couple rules to go by when you're trading this session, those of which are on the screen. We're only going to use previous US session highs and lows for entries, use previous US session highs and lows for targets or high points of resistance on the 30-minute. When you're aiming for a target and you see a huge point of resistance, you can use that as a target. It doesn't solely have to be US session highs or lows. If you see a place where it makes sense for price that might potentially reverse, or you might see a strong reaction off that level, it's more than okay to put that as a target, even if it means less of a risk to reward ratio. Now the last one, as stated in the previous video, we do not care what happens in the other sessions. This meaning no matter how many times London session This meaning it doesn't matter how many times London session, Asia session taps into our zone, as long as price is still around our zone, then we can still use it as a valid entry. Let's say price is lingering around the zone we marked out in the morning, it is still valid. It doesn't matter how many times that has been tapped into by the London session in the previous hours before. So we had a little bit of a taste on how to trade US session in the previous video I made. However, I'm just going to run through a more detailed approach, and we're going to go through some more examples on what I'd be looking for. However, it's the same sort of concept as to the previous video. So without further ado, let's get to some examples. So we might as well start with this example right here. As you can see on the 30-minute, we're not going to any 12-hour time frames, any hour time frames, any 4-hour time frames, etc. We only need the 30-minute, and we do not need to zoom out like a million miles away. So what do we see here in the short term? If we use our technique of cutting off, we can see, well, we're going up. We are in a uptrend. Again, you can draw the line to help you out, or you can use the simple pattern arrow tool to basically show you that, well, if this looks like a downtrend to you, there's still a lot of learning to do. So we can clearly see we're in an uptrend here in the short term. I still want to see when US session opens, I want to see some buys to the upside. That's what I want to look for. I would only look for sells if we maybe got a break below here and held it using the previous structure point. And I would most definitely be looking for sells if we broke here. So just for clarification, on a morning, you're looking at this, you'd only look for sells if we broke this structure point right here. Let me just move that out of the way, and you'd definitely be looking for sells if we came here. However, and some of you might have already realized it, obviously we're in an uptrend, we're going to be looking for buys. You guys might have realized, well, this would be our buy zone. Fortunately for us, it is reinforced by not only one, but three previous US session highs. You see they all bounce up, again reinforcing that fact these zones react off each other. Therefore, this not only is a strong support zone, we are reinforced 3 times that the US sessions are holding this area. Therefore, I would more than likely be looking for buys. All I'd do in the day, once I've marked this out, set a horizontal ray, click the timer icon. Okay, you can't do it on replay mode, that's my apologies. Set the timer icon. It allows you to set an alert on your phone when price comes to that level. If price comes to that level, You then get a notification on your phone. You open your phone, and if you get obviously the 5-minute buy signal, which we sort of covered a little bit in the previous video, then you would be in a trade, and then you can leave it until 5 o'clock. So without further ado, if we just delete this horizontal array, I'm going to jump to the 5-minute, and we are simply going to wait to see if price touches this zone, and secondly, if it gives us a 5-minute bullish engulfing candle, that we can get into the trade. And then from that point, and I don't bother finding targets until our entry point is hit. Call me crazy, you can do it before. Personally, I've done it for so long now that I'd rather wait for the target to hit and then I find a take profit zone. Just because the amount of times you waste time looking for a take profit zone just for your entry target not to be even hit. For me personally, I'd like to wait for my entry target to be hit, and then I'm like, okay, cool, take me a second anyway. I'll go find a take profit, and it takes me a second. Call me lazy, call me what you want, but that's what I do. Anyway, that's enough rambling. If we continue and play forward on the video, on the replay mode. Now I will be getting you some live examples once I can start trading in the week. It's currently the weekend, it's currently a Sunday, and I'm just making these videos for educational purposes. Of course, everyone wants to see live examples, everyone wants to see examples within the week. They will be coming, but as I'm making this course, this is what I shall be doing. So as we can see here, we have a different sort of pattern here. In the previous video, we had a perfect example. We tapped in, we created this engulfing candle here, and we would have got in and we would have bought. There is no different to what we would have done here. All you would have done, place your trade here, put your stop loss below the wick, because our entry criteria is met. It's hit our zone. It's given us a 5-minute engulfing. Two very simple things. Now all we need to do is go back in time and find a point at which we can target. Now we have a high over here. Yes, it's an Asia high. And yes, we can go back 3 years or whatever and find a US high that we can target. So now we have our entry. What we're going to do, we're going to go back, we're going to find some white candles, we're going to find a high or low of them white candles for our target. Now this could take some time, so I will get back to you when I find it. So for this instance, because replay mode only allows you to go back so far now, which I believe was never a feature, I'm not too sure, we're going to have to use the Asia high here just as an example. But what you would do in the real life situation, you'd go back, you'd find a US high or low that you could target, use the horizontal ray as I've shown, set it as your target, and then just wait for price to either hit your stop loss, either to go up into profit enough for you to go break even, or to hit your take profit. In this scenario, we're going to have to target the top of the Asia high, and it's just one of those scenarios. When you're at all-time highs and all-time lows, you will just have to adapt. I will make another video on that again. But a lot about trading is about adapting to situations. In this scenario, the simple adaptation is just targeting the Asia high. So it's not exactly the end of the world. However, it's what we shall be targeting. So we got our entry and we have a good risk to reward ratio. Now if we jump back to the 5 minute here, you see we got in and price extremely started to melt. A lot of people would panic at the sight of this simply for the fact that they see it's pretty much nearly hit the stop loss. So therefore like, oh, it's nearly hit it, I might as well pull out now because I pretty much lost the trade. No, what's the point of that? What is the point of that? You have a set stop loss for a reason. If price doesn't reach that, the amount of times I have saved a trade just by being 1 pip out is insane. So always leave it to hit the stop loss, or always leave it enough to hit a break-even point, which will cover, and definitely leave it to hit take profit, unless obviously it's after 5 o'clock and you want to close it out, then by all means close it out. Anyway, enough rambling. To play price on here, you can see we were saved again by a small amount of pips, and this would be a simple scenario. Let's mark it out. 5 o'clock. At 5 o'clock, you would literally closed out at break even. And this is a good prime example of not every trade is going to be a winner. In my eyes, a break even is a win because you didn't lose. So the opposite of losing is winning. Am I wrong? So that for me would be a good trade. Again, you could, in this scenario, actually you wouldn't be able to move it to break even. Unless you got a better entry than me. Let's say you got in a bit later, like down here, for example. Then you might have been able to get away moving it break even and letting it run overnight. But ideally, you'd want to be out at 5 o'clock just in case. I would 100 out of 100 times take a break even trade over a losing trade, and I think you can all agree with me there. So therefore, that's why we have that rule in place. Without further ado, let's move on to the next example. So if we move on to our next example, a lot of you will already be able to see and look what we're going to be looking for today. Using the structure and using the points that we know, we can understand that this bias on the 30-minute has now flipped bearish. Therefore, we're only going to be looking for sells in US session. However, there is a fine line with this one. Because we can see the previous pass, and I'm not going to go into all the way over here, but we see the previous pass, let's say the cutoff point is here. We are in an uptrend. Yes, we are broken to the downside. However, if we get a solid break in US session above this level, a tap back in and a 5-minute bullish candle engulfing, I want to see it take it up to either equal highs or even push higher. Or the other opportunity that could happen, we could push down, we could get a touch back in, and we could come all the way back down. So this is what I mean about understanding the 30-minute. So although we are broken to the downside, if we get a valid push up, a valid tap in, and a 5-minute engulfing bullish candle, then I would be in for buys, and then I would take it up to the previous US session high because that would be a good target. On the flip side, we are broken to the downside. If we get a bearish reaction off this zone, if for example US session pushes below, taps back up and gives us a 5-minute engulfing bearish candle, then I want to be taking it down to a previous US session high. For example, a perfect scenario is this one right here. Again, you could go searching for targets in the previous, but why search for all them targets when you have one right here? Another target you could use is maybe this one down here. You can also use, like I say, the lows of the US session. So, for example, this low down here. However, again, it comes back to that common sense. Is price really going to do that? It would take a lot of momentum to push price all the way down here. Your safest bet is going with this zone right here. So, if we just remove all this stuff, get rid of those as well, and we're just going to head to the 5-minute time frame, and we are going to wait for price to react to this zone. Bullish candle, I'll take it up. Bearish candle underneath this zone, I will take it down to the previous US session high. So we play price on. As we zoom in here, we're still looking for that engulfing candle. Has this, and this is another one not to get caught out by, has this candle engulfed that candle? Not really, because look at the wick. The wick is still bigger than this one. The body has not cleared this wick, therefore it's not a strong reaction, and you can already tell from this it is not a strong reaction. So we continue, and then we get a tap back in. So what was our rule saying? We've had a push down, we've had a tap back in. If we get a 5-minute engulfing candle, then I'd like to be in. Bingo. So we had one, and then this too, this engulfing pattern has covered this wick. Therefore, if we get in here, stops above the zone, and take profit down below. Again, you could be cheeky with it and put it down here. Always safer just to put it a little bit above the zone, just in case, and to manage your risk accordingly. Then if we play price on here, then we're fortunate enough that it melts. So it's sometimes it's going to be hard to identify engulfing, but if the body has not closed above the wick, then I do not want to be in that trade. I'm going to wait. For example, let's say this candle right here was a bit bigger and closed up here. Pretend that white part is the body of it. It closed here. Well, in this case here. Then I would be in. Then I would be in for buys. But because we didn't see a nice solid 5-minute candle close of buying pressure, then I would not want to be in that situation. On the flip side, we came down, we got a tap back in, and we pushed all the way down. Where did we push to, and where did we get a reaction from? A US high. So the zones work with each other, and it's imperative you understand the 5-minute candles. Again, I will go through them, but without further ado, we're going to move on to another example. So for our final example before we move on to trading London session, which trades the exact same, by the way. What do we see here? Now you may see, oh, it's a bit of a confusing downtrend, uptrend. As I've said in the past, guys, use what we know. If I then show you this, what do you see? An uptrend, right? So therefore, in the short term, it is an uptrend. Therefore, we are looking for buys. Or if you're confused, guys, cut it off. Cut it off to the last 3 colors that are being printed. For example, in this, we've got white, black, and blue. Just cut it off. Make it simple for yourself. Do not get confused in all this rubbish here. We're looking for buys. At what point will we look for sells? In this scenario, because price is already down here, I wouldn't mark this low as a place where we could see sells from. My first low would be this one, where we would then say, okay, we're looking for sells. For now, in the short term, I see this as buys, right? I see an uptrend here, and unless we can break this Asia low right here, then I'm not going to be looking for sells. I want to be looking for buys unless we break that Asia low, because that is our previous main structure point. Like I said, I would not target this London one because price is already there. If price had already started to climb up, then yes, this would be a structure point, and if we broke below here, then we could be definitely looking for sales. But because price is still here, then the only target I'm going to use for a selling point, if we break this low here, and then I'd only get an entry if we came below this US zone, tap in, and then a further sell-off. That's what I would use. So as discussed previously, what are we looking for? We're looking for buys. Where do we get buy points from? US highs and US lows. Therefore, all you do is mark out in this price range where the US highs are and where the US lows are. For example, here, and then because price is literally sat at this one here, we are going to mark out this low as well. And notice how I'm doing from the bottom of the body to the bottom of the wick. Yes, you could have it like that, but for me, what's the point of having a big ugly rectangle when you can refine it to something like that? You've still got a bottom of the lowest body possible, as long as the bottom of the lowest wick possible. So to me, this makes sense. Then you've also got the high. This can also be used as a potential target. And because they're sort of scrunched together, maybe it doesn't sound too ridiculous, but to see price go up here, it would take a lot of movement. You could mark it on there. I ideally wouldn't have it as a target. I'd just literally have this as a target, maybe this as my break-even target. So without further ado, we're looking for buys unless we can break this Asia low. Then I would simply be looking for sells. If we don't break that Asia low, I don't want to be looking for sells. Because in the short term, as discussed, when you move it and make it simple for yourself on the 30-minute time frame, we can see we're in a bit of an uptrend. Therefore, I'm going to be taking it upwards. Hopefully, this is starting to make a bit of sense as I keep going through points. Again, if not, give me a message and I'll do the best I can. So, if we jump to the 5-minute time frame, we are simply looking for buys from one of these zones, unless we break this Asia low. You see we come down, we nearly break it. I'm waiting for a tap in. We got a tap in. Nothing's engulfed yet. Nothing's engulfed yet. Patience, patience, patience. And just about bingo. It is just about engulfed that previous candle. Therefore, all we do, set up a buy. Put your stop loss below the wicks, below the zone. And then for the sake of the back test, we're going to put it here. But I think in the reality, my take profit would just be here. I don't like to be greedy with it. And I don't like to take anything under 1%. And it works for me. As soon as you start getting greedy, you start missing take profits, you start losing more trades, you start hitting more break-evens instead of taking profits. And then it messes up with your entire risk to reward ratio. So, for the sake of the back test, you can be greedy in a back test, just don't let it become a habit. Make sure that when you're trading with your money, with your hard-earned money, that you have respect for this money and that you are having targets that make sense. Don't think, oh, well, if I just put my take profit higher, I can make more money. Technically, yes. But the reality is you might hit what would have been your realistic target, but because your TP is not there, you wouldn't have taken profit, and then price sinks. And then instead of walking home with a 1 to 2 risk to reward or 1 to 0.5, you've got nothing. You've got maybe a quid because you did break even. So just be cautious about that. Anyway, we see price pushes down again, but this is why we have our stop below the zones, below any wicks. And in this case, we were fortunate enough, price just completely rammed up. You can see here, though, price did react to this zone, and it reacted off this zone. So if you're ever having doubt about do zones really just work off each other, can it be this simple without sounding like an absolute trying to be a salesman or whatever? Yes, it can work. Yes, it does work. Yes, you can quite clearly see from the examples I've shown you, they react off these zones. Now, if you're trading London session, Asia session, US session, this is how it works. On the 30-minute, make the bias easy for you. Don't get caught up in all the quote-unquote noise that's in the past. Move your screen forward, see what's in front of you, and be like, okay, well, what in the short term do we have? In this case, it was an uptrend. I want to be looking for buys. What is a previous strong structure point that I can use to say, actually, well, no, if price comes below this, then price will flip to the downside, and then I only want to be looking for sells from previous US session, either lows or highs then. But because we were in that short-term uptrend, and because we didn't break the Asia low that I was on about in the past, I was only looking for buys from US highs or lows. And look how it turned out. And the targets, what were the targets? Previous US session highs and lows. Look how price reacted to the previous US session highs and lows. So it does work, guys. It does. So please implement this. Like I say, test it, forward test it, back test it. Use the signals I post in the group and compare. Do your own analysis first before you look at mine. And if it matches up with mine, then you are completely on the right track. Then a lot of it comes down to psychology. Then work on your psychology. Make sure you have them losing trades to, keep you in the loop. And as soon as people start winning too much, it messes with the whole psychology. So when you have your losing trades, just make sure that you did everything you could possibly. You did everything I taught you. Was there anything outside that you did wrong? Maybe that engulfing candle really wasn't an engulfing candle? Any questions about that, let me know. But this is the general concept for trading US session, London session, and Asia session. They will have their own separate videos because I do want to go through as many examples of this as I possibly can, just so you all get the best understanding possible. So hopefully this makes sense. Any questions, let me know. But thank you so much for sticking through to the end of this video. Thank you.